All right, guys, good morning and welcome back. We'll kick off the pre-market prep here for Wednesday, May 18th. Happy hump day, y'all. So the futures are down a bit here. Got the S&Ps down just about 1%. You get the QQQ futures down about 1 and change. So we did hear from Powell yesterday, and the initial reaction was pretty good. The Qs closed at the high of the day. The S&Ps pretty much go out on the high of the day. But keep in mind, we're getting pretty close to that daily 21. So you're kind of a stone's throw away from a key level of resistance and the level I'd like to put on a few shorts. So I think the big question heading into this morning is, do we just roll over from here, or do you get a little bit of shakeout, then you see the market higher? So time shall tell, guys. In terms of levels to focus on, I think for your S&Ps, you could probably keep it simple. Above that big psychological level of 4,000, the bulls might have a shot here to try to pull it higher. Back under 4K, we could be heading down to test those lows. So as far as the short side goes, I want to show you a few different names here. And obviously, I think the easiest shorts would just be shorting the S&Ps, or shorting the QQQ, shorting the IWM. Shorting one of the indices kind of covers all the bases. As far as the individual stocks go, I'd like to short Apple. Let's see, Apple's trading at 149. Yeah, it's a little bit too oversold. So as far as a few things we could short a little bit closer to the 21, one name that we saw yesterday, guys, that I kind of like here for a short is Wynn Resorts. So we'll spend a few minutes here, and we'll start with the weekly chart. So the major thing to keep in mind, and we kind of have this all over the place, the S&Ps, Tesla, Google, Apple, we have these weekly squeezes. A few of them starting to fire short. A handful of them haven't even fired short yet. So with Wynn Resorts here, as long as we're under that weekly 21 EMA, we're going to look for that weekly squeeze to bring this lower for another 4 to 5 to maybe 8 weeks. So if you're working with that bearish weekly structure, that's where you can anchor to that daily 21. Is a pretty good spot to work a few shorts. So here's what I'm thinking as far as the trade. The target to the downside would be a push back down towards that recent low. So we can call our target 55. As far as the exit goes, I think we can keep things nice and tight. A couple closes back above that daily 21 EMA, we might want to cut the trade loose. I would like to say, hey, we can give it all the way up to the weekly 21. That's closer to $80. It's a little bit of a bigger bounce than I'd want to sit through. But here's what I'm thinking for the old Wynn bag. We can go June 17th expiration. And let's weigh our options here, guys. I don't think it's going to be a great candidate for a call credit spread, but let's see. $1.80 a credit. Actually, I tell you what, the call credit spread isn't too bad. We can look at that. We can also look at the debit spread. So let's see. Let me price this out. Let's see, 70.55 put debit spread. So $15 wide. It's going for about $5.60. So as far as worst case scenario, best case scenario, it's a good risk reward. Let's throw this into the Analyze tab, and we'll take a better look at it. All right, so let's look at this into, let's see. We'll look at this into the 3rd of June. So saying, okay, we take the trade today. We buy that 70.55 put debit spread for $5.60. Let's get a sense of the risk reward a few weeks from now. So if we look at this into June 3rd, the target to the downside is about $55. So per contract into June 3rd or around that time, if we're getting our push down towards 55, you're up about $650 per contract on a trade where you're only risking $560 as far as the max loss. So it's a double. a little bit better than a double. But then as far as the risk management, let's call 70 our line in the sand here. This starts to close back above 70. We're going to cut the trade loose. So the reward down to 55 is about 650 bucks. And if we're popping back towards 70, we're going to lose about $280 to $300. So I kind of like everything about that trade. We're looking to get short in the direction of trend, structure, and momentum. We've got the sell signals on the daily chart. But more importantly, the trade here offers a really good risk reward. You short it today on a move up to 70 bucks, a couple closes back above 70. We're risking about $300 per contract. If this can flush back down towards 55, we're going to make about 650 bucks per contract. So I like those kinds of trades. You're risking one to make two. So there's one option for you guys to keep an eye on. There's a few more setups out there that are pretty similar. A few of the airlines here. Southwest does close above the 21. We've got a short in McDonald's. Kind of the same dynamic here. You could go with some debit spreads. You could sell some call credit spreads. But as far as the overall timing, as far as when we want to get short, I think we got some timing here because now we've got, and we'll see where today goes. You do at least have the S&Ps off of the floor. It's a little bit tougher to want to short McDonald's, to want to short, pretty much anything when the indices are so oversold. Because the risk you run is you short, say, Roblox. At the same time, the S&Ps are oversold. And then, of course, as the S&Ps rally back towards their 21, there goes Roblox. In this case, you're up, 40, 50, 60% in a few days. So I think we got some timing here. We might roll over at the open, so we'll see where today goes. But if anything, we got the opportunity here to put on some shorts without the S&Ps being so oversold. So in the event over the next week to 2 weeks here, we do see the market roll back over. That's when you want to have the shorts on the board. As goes the market, goes the stocks. So in terms of probabilities, if the S&P 500 rolls over, next 2 to 3 weeks, very likely to see Wynn Resorts roll over next 2 to 3 weeks. Same thing would go for a McDonald's, right? Same thing would go for a name like an Apple. Same thing's going to go for these crap stocks like a Roblox or a Peloton. For those of y'all that tune into these sessions, that's kind of been the game plan over the last, week or 2 weeks here for us. We want to get shorts on. We've got sell signals everywhere. We've got bearish weekly squeezes. We've got monthly charts. We've got monthly charts starting to break some structure. We've had every reason in the world to want to get positioned short, but the only thing that's been missing is a decent entry. You have your S&Ps down 1% here ahead of the open. So maybe that's all she wrote as far as the bounce off the bottom. But we got a little bit of timing here now, guys. So that covers the short side. For those of you in the mastery, all we got as far as the shorts for now is McDonald's. We're probably going to look to work a trade on Wynn, maybe a few other spots here today. And then, gang, as far as the bullish side of this market goes, not too many changes there. Energy's been a great trend all year. That continues. Nice daily squeeze. You got the buy signals. So buy the dip, I think, is well and alive here in energy. So Oxy, ExxonMobil, there's MPC. Right? You got some oil plays like USO. You got some natural gas plays like UNG, which we might be getting. We'll see, guys. We might get some fills on the UNG trades here at the open. But a lot of the same spots, guys. My man Sam got the options room into BMY yesterday. I think another good example of a beautiful setup in a bearish market. I think Coca-Cola still lines up. So we grabbed some Coke here yesterday. So if you know where to look, you still got some good trends out there. Energy, oil, natural gas, a few of the fertilizer stocks. like CF, even Mosaic's trying to shape up here. But a few good looking spots, guys. Overwhelmingly, we're looking to short the bounces. So we'll see how today goes, guys. I think 4K is your big line in the sand. So if you're looking for a low risk, high reward day trade, short term swing trade, watch this flush this morning. See if 4K looks like it's going to be support. Then maybe you take a stab at it. You can sell a put credit spread with a close on a close under that recent low. See, you risk a few points to make some decent cash if it does turn the corner here. But that's what I got for you guys this morning. Bullish, focus on energy, oil, natural gas, few of the fertilizers, not the Home Depots, the Coca-Colas, the Pepsis, and then for the short side, well, that's a big list of opportunity there. A few of which we've been covering. So if you guys and gals got anything you want to cover, any chart suggestions, I'm all ears here. But I do got to be in the option Zoom in about 10, 15 minutes. And we'll see what's in store here for the open. Hey, good morning, Lee. We'll take a look at Marvel. So we do have, you still got a lot of names announcing earnings. So keep that in mind. Earnings in a couple of weeks, May 26th. For now, as far as the overall structure, for me, I'd be looking for the short. No stacked DMAs on the weekly chart. There's negatively stacked DMAs on the daily chart. And if you look at the last couple of months here, you are seeing these bounces getting rejected right at that daily 21. So this is where either in the short term, Marvel can kind of turn the tide here with a couple closes back above the 21. Now, that doesn't mean this turns back into a bullish trend. It just means it might run for a little bit if you can crank out a couple closes. So in that instance, for conversation, Lee, say you're looking for a short. If we do get a couple closes back above the 21, you probably look to short the next close back under it. Or if we're just getting rejected here, could roll right back over. So it looks like we're going to open up around 56.50-ish. So it does open up a little bit lower this morning. For now, I'd look for the short. But being that we're a little bit oversold here on the weekly chart, I think if you get a couple closes back above that daily 21, you might see it try to run for a little bit. Hey, good morning, Sebastian. Always good to see you. Okay, Lee, you're looking for a short? Cool. Yeah, that's what I'd look for. More of the same, where these moves back to that 21 get rejected, then it goes on to make a new low, where you might get a little bit of that. It'll probably go with the market. But Cooper's got Roku here. The rowdy Roku. Same kind of thought process here as Marvel. For now, this has bearish trend structure momentum. Up to this point, these bounces to the 21 EMA, they've gotten rejected, and it goes on to make a new low. And that just tends to be the ebbs and flows when you're in a downtrend and when you have that bearish structure. Now, in the short term, very much like we just saw in Marvel, couple closes back above that 21 doesn't make it bullish, just means it might trade a little bit higher. And I think, we want to be really conscious of that, guys, because keep in mind, it's one thing to try to short the pop into the daily 21, but we're doing that in a moment in time where a lot of these names are still oversold. Meaning Roku's down here at minus 2 ATR on the weekly chart. So say Roku's trading at $95. Okay. Just for some important context here, Roku's trading at 95. And we've got the weekly 21 around 140. So much that means Roku could rally almost 50% from here, be in the downtrend, still be bearish, still be a good. We're a little bit oversold though. So I think we continue to look for the trend, but that this could rally 50% and still be bearish. right? It could go up 40, 50%. It's just a bounce back towards the weekly 21. Because of that, I think, yeah, you can short it here, but a couple closes back above the daily 21. Maybe you cut it loose and just kind of take it from there. But I'd be leaning to the short side for now on the Roku. All right, let's see what else you guys got here. A Flaming Giraffe, good to see you again. BSM. Never heard of it, but that doesn't matter. It shapes up pretty good here. Weekly stacked DMAs. So that means our weekly chart has bullish trend and structure. Stacked DMAs on the daily. So the daily has bullish trend and structure. We got the buy signals. We have a daily squeeze. And this doesn't really seem to care about the current market environment. So what is this? Blackstone Minerals. I don't think a name a lot of us probably ever focus on. For most of us on the morning call here, might be our first time seeing it. But for a lot of us guys, we know this kind of quality trend. So until something changes, I think you're looking for higher prices here. Right, weekly chart is nice and solid. 4-hour squeeze setting up. 2-hour squeeze. Yeah, good find here. Good find. I like that. I like that one. Hey, good morning, Moses. Yeah, Target and Costco. The rumor on the street is Target's going to take a bit of a tumble here. So let's do this quick math, guys. With a close yesterday at 2:15 and an open this morning after announcing earnings last night at 160, 25% gap to the downside. So in terms of trend, structure, momentum, a 25% gap to the downside basically throws that all out the window. The daily chart was already breaking down. If you look at the weekly chart before last night, we were in a somewhat sketchy weekly squeeze. That's going to totally fire short. Right? So this structure and trend gets blown out. And then you look at a monthly chart, we're going to open up, guys, near -2 ATR on a monthly chart. In plain English, it's going to open up, and from a technical perspective, it's going to be, extended as hell to the downside. There's not too much we can anchor to here. Realistically, guys, I think other than these big psychological levels, if the monthly 21 EMA was down here at 160, right, we got something to anchor to. Right? That might be the spot to buy the dip. I think the better way to look at any kind of trade here is it's going to open up deeply oversold, right? -2 ATR on a monthly chart. And you've kind of got that big 150, right? That big psychological level to anchor to. So I don't think you do this blindly. For those of you that use Sam's high-low tool, probably a great time to use something like that, or the ready aim fire. But you could potentially come in here, maybe sell some put credit spreads with the idea that 150 holds. And if 150 doesn't hold, you'd probably cut that trade loose and head for the exits. So that's not based on any kind of structure. All right, we're not pulling back to any major moving average. It's just more so this is going to be deeply oversold on pretty much every time frame. And with a 25% gap to the downside, think about the put contracts. So what's going to happen this morning to the 150 puts, the 145s, the 140s, the 120s? They're going to explode in premium. Right? But this is important, though, so get where I'm coming from. Imagine that 140 put or that 150 put. Because of this huge gap down this morning, that 150 put is going to blow up like a balloon. Right? All that implied volatility, all that premium is just going to get jammed into that 150 put. The reality is, though, if Target just kind of holds up, doesn't have to rip higher, doesn't have to rally, but if this opens up this morning, the next couple of days, the next week or so, it just kind of generally trades sideways. That 150 put, after getting like crazy inflated is going to get deflated, right? There's going to be a needle taken to that balloon. All that premium, all that implied volatility is going to get sucked out. So I'm not saying it's something that I would look for, but what you could look for in these instances is, okay, I'm going to come out here, I'm going to go July 15th expiration. I'm going to wait till the open, of course, but let me see what this 150, 145 put credit spread's going for. Obviously, before the open, you want to think about selling that credit spread. So there's your risk reward as it currently sits yesterday. You sell that credit spread, you're risking $5,000 to make 120. This morning, it's going to offer a much better risk reward. But what I'm saying here is, hey, if target just kind of holds up, reality is going to sink back in, and that 150 put's going to get crushed. So again, it's not based on, hey, here's a nice pullback to support or anything, but a little bit more so the mechanics of options. So something to keep an eye on there. And then you would want to look at Costco. Let me see. Look at a monthly chart at this point. Okay. So big picture-wise, Costco still in a bullish trend all the way down to 450-ish. Now keep in mind, it's a monthly charts perspective. As far as a trade idea here, I really don't have too much, at least not as it currently sits. It's not my kind of structure to get long, but this thing's so oversold, they could rip 30 points here and still look pretty bearish. All right, what else we got here, guys? Hey, good morning, Janice. KHC is looking good. It is looking good. That one's looking good. Kraft shapes up pretty good. General Mills holds up pretty good. You got the Pepsis, the Coca-Colas. So as far as KHC goes, I have to like it. Not Amazon. It's not Google. Not Nvidia. Right? It's not a big, sexy name, as they say. But we don't have this kind of quality trend and structure in any FANG stock right now. It's going to be a long time before we have that in Apple. It's going to be a very long time before you have that in an Amazon or a Facebook. As far as taking bullish swing trades, we can force the issue on the kinds of names that lack that structure, or we can just kind of follow the pretty colors. So I'm a big fan of that setup for now. Michael, EA is a short. Okay, let's see. So you do clear back above the daily 21. But no stacked DMAs, so it's far from bullish. So let's see the weekly chart. So if you're going to look to short this, and I think based on the overall market and based on some of this structure, you might have a short lined up here. As far as making it as easy on yourself as possible, wait for a move and a close back under that weekly 21 EMA. Because ideally, if you're looking to short here, we're trying to catch that next flush. So to get short back there, there's kind of the ideal scenario. You short it, it rolls back over. What can be a bit more of a pain is there's a bounce to the weekly 21. It closes above the weekly 21. Then you short it. And then it trades higher to sideways for a month or 2 months. So wait for that confirmation. We're still in a bearish weekly squeeze, but wait for that confirmation. So that's going to be a close under 127-ish, 126-ish. If you want to take it a step further, actually, I wouldn't wait for a close under the daily 21. So that's what I'd anchor to for now. We head into Friday with a close under the weekly 21. You're going to get the opportunity to set up a good risk reward short. So if this closes 126, you short it. You can cover your short and close that trade for a small loss on a move back above 21 next week. So that's kind of your risk. But getting short here, your reward is a flush back down to 110. So in terms of the equity, okay, we're going to risk $4 to $5 to potentially catch 15 and change. So I do like that one a lot there. Good morning, Alan. Quick look here at Kroger. We got here Kroger. For now, I'd go with a short on this one. I got to check the weekly, though. So let me see. So you'll notice here, guys. Let me see. 52 is a big level here. 52 is a big level. That's your weekly 21 EMA. So compare the weekly structure here to, say, the weekly structure in something like Wynn Resorts. This is just ugly. And that's what we're looking for when we're trying to short. Negative histograms, weekly squeeze firing short. We've been under the weekly 21. Negatively stacked DMAs. Compare that to Kroger. Time being, the weekly chart does hold structure a lot better. However, we haven't gotten a weekly close under that 21 EMA since November. So if we can close this week under that 21, it's not the most bearish trend, so we got to keep that in mind, but that is a big shift of structure. That could at least get you down towards -1 here on the weekly chart. So that's what I think you should focus on if you're looking at this from a bearish perspective. If you're looking at this for a bullish trade, then it's just the opposite. If we can close above the weekly 21, you probably get continuation of that trend. So that's the level I'd anchor to on that bad boy. Weekly 21 EMA. All right, guys, I think we've gone through everything here. Let me make sure. All right, Manveer, you got a few questions here. Let's get these out of the way. Puts on the home builders. Nothing bullish about them. Nothing bullish about them. Put it this way. The probabilities point towards, if the S&Ps roll over from here, this is going to roll over as well. So I might be able to show you a few charts I'd rather short, but that's just kind of nitpicking. If the overall market rolls over from here, this probably rolls over as well. So then just try to make some rules for yourself as, okay, what do I want to see for an entry? Could be a close back under the daily 21. Have a few rules here, but the timing is going to be trying to short this when you're getting that break lower in the overall market. Because when does this bounce? It bounces when the market bounces. And when did it roll over? When the market rolled over. And when did it bounce? When the market bounced. So if you get your S&Ps rolling over, you get ITB with a close back under 58. Yeah, probably sets up the short there. And same thing for XHB. Same thing there. Hey, good morning, Terry. Good morning, Nick. Good question, Bill. So we got an upgrade from Penn this morning. Won't that affect Wynn? Being that there doesn't seem to be any reaction in Penn, I think it might open up about 50 cents higher here. For now, I would say probably not too much. As far as a potential short goes here, though, you want to start to pump those brakes, I think, if it starts to trade back above the 21. So that's where catalyst, guys, we take a potential catalyst that either works in our favor or potentially against us, and then we just have to stick to our rules. So say this morning, right out of the gate, I short Wynn, and then you have some news about a Penn upgrade, Wynn starts to bounce. Okay, so there's a catalyst. It's not working in my favor. I'm still going to stick to my guns. Same thing to the downside. So we'll see, Bill. We will have to see. But all right, my friends, another good crowd this morning. So I appreciate each and every one of you showing up, putting in a little bit of work here ahead of the open. For those of you in the options room, I'll see you guys in there for a few minutes for another hour of fun. And for those of you in the mastery, I will see you guys after my options room session. So we are grinding away here today, guys. But I wish you all the best of luck. Trade safe, and I'll talk